In November 2025, Bitcoin is undergoing a significant correction, trading once again around the $99,000 mark after recently peaking above $111,000 just weeks earlier. This move not only breaks the recent upward trajectory, but also shatters a deeply ingrained seasonal narrative in investors' minds. The legendary Uptober, the historical tendency for October to be a bullish month for BTC. Indeed, October 2025 did not close in the green, a rare occurrence in recent cycles. The last time this happened was in 2018, a year marked by one of crypto's deepest corrections, with Bitcoin crashing minus 36.57% in the months that followed. This historical parallel inevitably fuels anxiety among retail investors who quickly ask, are we entering another prolonged downturn? However, professional investors don't react to superficial calendar-based comparisons. Instead, they assess structural fundamentals, macroeconomic cycles, and on-chain behavior. And from that perspective, today's environment differs dramatically from 2018. In 2018, the market was still reeling from the speculative frenzy of 2017. With no institutional adoption, minimal regulatory infrastructure, and immature blockchain networks. In contrast, the 2025 crypto ecosystem operates at an unprecedented level of structural maturity. Spot Bitcoin and Ethereum ETFs are already trading on US exchanges, with assets under management exceeding $150 billion. Corporate adoption is firmly established, with companies like MicroStrategy holding tens of billions in BTC as treasury reserves. Professional custody infrastructure, deep institutional liquidity, security, and integration with traditional finance are now standard. The April 2024 halving has already been priced in, with programmed scarcity continuing to exert long-term supply-side pressure. In this context, short-term price drops, even sharp ones, do not invalidate long-term fundamentals. On the contrary, they are an inherent part of Bitcoin's cyclical nature, which historically alternates between phases of euphoria, distribution, capitulation, and accumulation. The current moment may well represent a distribution phase, where short-term investors driven by FOMO, fear of missing out, exit the market, while more strategic players use lower prices to strengthen their positions. This is precisely where true investors are separated from mere speculators. The speculator sees volatility and assumes imminent risk. The investor sees the same volatility and recognizes a discount on a global, scarce, and non-confiscatable asset. After all, Bitcoin remains the only digital asset with a fixed supply 21 million units, proven decentralization, and growing global recognition. Moreover, on-chain metrics do not indicate widespread panic. Despite recent sales by Oz long-term holders, long-term HO dealing remains robust, with over 70% of the circulating supply inactive for more than a year. This suggests the market's foundational support remains intact and that the current pullback may simply be a healthy correction following a vertical price move fueled by excessive optimism. Therefore, far from signaling imminent collapse, this dip may represent a strategic entry window for those with a long-term horizon. Historically, the best times to accumulate Bitcoin have always occurred during periods of widespread fear. When media headlines declared the end of BTC and social media overflowed with despair, as veteran investor Paul Tudor Jones famously said, "By when there's blood in the streets, while there's no literal blood today, there is certainly panic in the timelines and in the world of risk assets. That's often an excellent contrarian signal." In summary, there is no reason for panic, only for discipline and analysis. Fundamentals remain strong, and the ecosystem's infrastructure is more resilient than ever. Dips are part of the process, and for those who understand cycles, they represent opportunity, not threat. As the old market adage goes, markets fall, but conviction is what builds wealth. While many are asking whether they should sell, the most strategic are already positioned or preparing to enter. After all, Bitcoin isn't about predicting the future, but about being prepared for it. And in this scenario, $99,000 may seem expensive today, but cheap tomorrow.